if we really go to say 500K Bitcoin, that would be a 10 trillion market cap, up from today's 2 trillion market cap. So that needs some capital, some flowing from either real estate or stocks or bonds or gold towards Bitcoin. And yeah, I think that's what we're seeing right now. The returns of Bitcoin are not normally distributed, so it's not like we get an all-time high and then a bear market and then an all-time high and then some middle ground. No, it's all-time high after all-time high after all-time high. It's very clustered. So maybe 6 to 12 months of real bull market action would be nice, though.
Plan B, the visionary behind the groundbreaking stock-to-flow model, has once again captured the crypto world's attention with his bold prediction for Bitcoin in 2025. This isn't just another prediction. It's a carefully calculated trajectory based on years of market data and analysis. Known for accurately forecasting Bitcoin's price movements in the past, Plan B's latest forecast suggests that the next phase of Bitcoin's growth could blow past all expectations. His insights are not just idle speculation. They're rooted in a deep understanding of the market and Bitcoin's fundamental properties. With Bitcoin's current price action and the underlying macroeconomic trends, it's clear that Plan B's model isn't just about numbers. It's about the revolutionary impact Bitcoin could have on the global financial system. But what's even more thrilling is the confirmation of an inevitable rise in demand as governments and institutions become more involved, pushing Bitcoin into uncharted territory. If you're as excited about Bitcoin's future as we are, don't forget to like the video, drop your thoughts in the comments below, and subscribe to the channel. Your support helps us bring more expert insights so you don't miss out on the latest crypto trends and predictions. Thank you and enjoy the video.
I think last time we spoke, we already said, well, this is a bear market. For sure there will be a bull market again. Maybe or probably there will be ranges like 100K, 1 million. That's a wide range, obviously, but I still think that range is, we can narrow it down a little bit. I've done that before on Twitter. So I'm thinking 250, 1 million is where I expect it to be on average, right? That's not the all-time high or anything. That's the next level that Bitcoin will rotate to with all the action we see on the MicroStrategy, treasury kind of things, and with Trump and National Reserve talks, big investors, ETFs. Yeah, to be honest, I would be surprised if we're not ending somewhere near 250, 1 million. If we really go to say 500K Bitcoin, that would be a 10 trillion market cap, up from today's 2 trillion market cap. So that needs some capital, some flowing from either real estate or stocks or bonds or gold towards Bitcoin. And yeah, I think that's what we're seeing right now. That actually Bitcoin should be in a well-balanced portfolio. It has a place in a well-balanced institutional portfolio. That was unheard of a couple of years ago. Right now, it's I mean, the BlackRocks and the Fidelities are talking about it like it's always has been like that. And it's logical. So no, I think those events play into the enormous jump in price level that we all expect. And it's I mean, in that case, and I'm thinking about my third article that I once wrote about the stock-to-flow X model, which is of course a very broad model, but it was comparing Bitcoin with gold and real estate, and it was talking about stages, like or phases actually. So the beginning, Bitcoin was just a proof of concept, a nerd toy. Then it went to a transactional thing. It broke $1 for one Bitcoin. It was wow, this thing has some worth. We can use it for paying cups of coffee, and then we got the idea of digital gold, and now we're entering a phase where it's an institutional asset, a real institutional asset, where BlackRock, Fidelity, and even national states are thinking about investing in it. So no, it's really a next chapter And a new price level, a higher price level, goes with that next chapter.
I mean, this level of the institutional adoption that you just talked about, the mainstream recognition of the asset, the biggest institutions in the world talking about Bitcoin like they've been orange pilled and they've been here forever. I mean, Larry Fink sounds like Satoshi Nakamoto at this point, right? I mean, do you find all of that surprising? Because I am a bit shocked we got this far this fast.
No, same here. I'm surprised too. It's always very surprising that it's 3 years of nothing and worries and exchanges failing and all kinds of risks. And then all in a sudden, everything happens at the same time. It has always been like that. 2013, 2017, 2021, and now probably, well, next year will probably even more surprising than this year. Everything tends to be clustered in this very short period of time, and it always comes as a surprise, even if you have lived through 2 or 3 cycles.
Does it worry you now that it's being so institutionalized and it's kind of getting out of the hands of those original holders who are passionate about it for a very specific reason?
No, it doesn't worry me at all. Actually, I think the wealth distribution problem in the world is not going to be solved by Bitcoin. So there will be it will be Pareto distributed wealth, and so a couple of people will own most of the wealth, and most people own the rest, which is a small part of the wealth. And within Bitcoin, that will be the same. So, for example, well, of the 20 million Bitcoins out there, 1 million, of course, is Satoshi. That's probably gone forever. But then there's the Winklevoss brothers, early OGs. They also have 1 million Bitcoins, right? And
Crazy.
so, yeah, and then you have Michael Saylor now. What does he have with a MicroStrategy? Like
400,000 or so, probably at this point. Yeah.
Yeah, and then there's a couple more OGs that have 100K or more.
Yeah.
Yeah, that's in every aspect of the economy, and that will not change with Bitcoin. It will not be evenly distributed. And for example, the ETFs, it looks like BlackRock and Fidelity, the really big capital managers of the world, the money managers, that they have that money and they control it because it's in their ETF. But of course, they own it for the clients.
In a move that's turning heads across the financial and crypto worlds, Germany's Allianz insurance company has made a groundbreaking decision to hold MicroStrategy's Bitcoin-backed bonds. This bold step underscores a growing institutional appetite for Bitcoin as a reliable store of value and hedge against economic uncertainty. By aligning with MicroStrategy, a pioneer in corporate Bitcoin adoption, Allianz is signaling confidence in Bitcoin's long-term potential. This decision reflects a broader trend of financial giants recognizing the unique advantages of Bitcoin, from its scarcity-driven value to its resilience in volatile markets. But what does this mean for the future of crypto and traditional finance? Let's dive deeper into Plan B's insights as he breaks down the implications of this monumental move.
And in that way, the most exciting news from last couple of weeks I found was Allianz insurance company, a German insurance company that had 25% of the MicroStrategy bonds, the Bitcoin bonds, on their balance sheet. Now that is real money. That is really Allianz's money, Allianz's balance sheet. They have to they run the risk on those bonds, which is low, of course. But that's the first big insurance company that puts a toe in the water and puts a Bitcoin-related exposure on the balance sheet. That's real money on a real institutional balance sheet.
What do you think his angle is? This massive uptick in buying, even at these higher prices. I think we all understand that, he thinks it's going much higher, that basically he's found a bit of a money glitch where regardless of the price, he can make money. But if he ends up, with 1 million, 2 million Bitcoin down the road, what do you think the final plan is, or the final angle there is for MicroStrategy?
Yeah, I think he talks about that himself, and there's so many angles. We could talk hours about the MicroStrategy case alone. And A couple of things. He was the first. I congratulated Michael when he just did it. When he did his first purchase, I said, "Well, congrats with basically having the first ETF on the market," because he has this vehicle, an exchange traded company that he filled with Bitcoin, which then essentially becomes an exchange traded fund avant la lettre. So even before it was allowed for real ETFs, he was doing it, and that alone was like a brilliant move. But then the end game, it's funny if you look at the German Weimar period, the beginning of the 1930, 29, that period, when we had hyperinflation in Germany. There were a lot of losers, but there were some winners. And one of the winners was a guy who had a company who actually borrowed money in that worthless paper Deutschmark and then bought gold with it, the gold bars and the gold marks. So and essentially Michael Saylor is doing the same thing. It's really, really interesting what he's doing. And also what he explained time and time again is, I will never sell my Bitcoin. And I understand that because especially in a capital gains tax environment, you would rather borrow against the Bitcoin and then wait until Bitcoin goes up and then roll over that debt with a bigger debt. So you just pay it off and have a bigger debt. And so you indeed never sell the Bitcoin. And that's very interesting thought for also personally people, if they need money, like, well, take me, for example. I'm all in Bitcoin since, for a long time. And so I have to sell to eat. But I can also borrow against the Bitcoin and eat from the loan, which is wiser, I think, than selling the Bitcoin, because the Bitcoin will catch up. And you just repay the loan with a new loan. So that's very interesting. And another thing, I find it really interesting as an institutional investor, because there is all kinds of arbitrage going on as we speak between the crypto world, the Bitcoin world, and the fiat world. So, and essentially, Michael Saylor is playing this arbitrage superbly. But you can do it yourself as well, right? I mean, if you look at the futures market now, it's not as wild as 2021. For sure it will be, but right now, if you just buy a Bitcoin for, say, what is it, 95,000 or something, 1,000 euros or dollars, you can sell that Bitcoin in the futures market for 1 year later, just for delivery 1 year later, for 105. So that's a $10,000 risk-free, quote unquote, profit, which is a little more than 10%. So, of course, you run the exchange rate risk on the exchanges that they go bust. So you should do it with a CME or something. But if you can borrow money for less than 10%, and Michael Saylor is borrowing money for 0%. Then it's just free money. It should not exist in a efficient market world. So no, I understand Michael Saylor, and everybody can do the same thing.
As we wrap up, Plan B's 2025 prediction paints an electrifying future for Bitcoin, one filled with immense potential and unprecedented opportunities. Whether it's the increasing institutional adoption, groundbreaking moves like Allianz Insurance's Bitcoin bond investments, or Bitcoin's trajectory as the ultimate store of value, it's clear we're witnessing the dawn of a new financial era. The question now is, are you ready to embrace this seismic shift? Let us know your thoughts in the comments below. If you found this discussion insightful, don't forget to hit the like button, share your insights in the comment section, and subscribe to the channel for the latest updates and expert analyses. Your support helps us bring you the best crypto content, and we'll see you in the next video.